Today is October 19, 2020. Today I'm going to talk about Tesla. Tesla is scheduled to report earnings next week, the Q3 earnings. So there's going to be a lot of volatility going into earnings and shortly after earnings. Now, I believe that the market is kind of expecting Tesla to report another profitable quarter. But then it's a matter of how profitable would it be. So we're going to take a look at the price action and some of the fundamental. And what are the analysts expecting? What are their estimate in terms of EPS and also sales number? Strange thing is, recently we saw Tesla lower the price on the Model S and also the Model Y. So that is kind of interesting. Why would they lower the price of the Model Y if the demand is increasing? I could understand the Model S to basically try to make it a little bit more competitive and sort of balance the sale based on model a little bit. Now, I think the number that they're going to report is probably will be good, right? Because they're increasing sales number from China, and they are doing better domestically, also comparing to the traditional ICE automobile makers like the GM, Toyota, Honda, Ford, and those guys. Okay. So I wouldn't doubt the number. I think it's just living up to the expectation. How realistic will Tesla be able to deliver 500,000 cars this year? And you don't hear too much about Elon hooping about that, making that number. It seems like it's softening and backpedaling a little bit away from that number. So we'll see. So I think the conference call will be interesting on this Wednesday afternoon. Now, before we go and take a look at those analyst estimates, I just want to show you what Tesla put out on a press release regarding to the Q3 2020 vehicle production and delivery. So you can see that the Model S, right here are the numbers. The Model S production, they produce a little bit under 17,000 vehicles and deliver a little bit over 15,000. Right? And the Model 3, it produces a little bit over 128,000 vehicles and deliver a little bit over 124,000 vehicles. So the total production for the quarter was 145,036. That's the combination of SX3 and Y. And it delivered 139,300. So just 700 vehicles less than what the street was sort of expecting, 140,000. So that is not bad. Okay, here are the estimate from the analysts. And looking at the estimated earning, basically we have 15 analysts putting in numbers. And right now the average estimate is to be profitable 56 cents per share. And the low estimate is 23 cents. And the high is 98 cents. Okay, and a year ago it earned 39 cents. And now let's go and take a look at the revenue. So we got 17 analysts putting in number for revenue. The average estimate is 8.26 billion. The low is 6.68 and the high is 9.68 billion. A year ago it was 6.3. So you can see even the low estimate would beat the year ago sales number. And here's the recommendation from analysts. We have basically 8 buy or strong buy combined out of 23. And I believe this is probably one sell. The average price target is $309.55. So those are the analysts' estimate. Now let's take a look at Tesla's price action here. I basically got the daily price chart here on Tesla, and as you can see, some of the level here. Here's the day that Friday S&P 500 made an adjustment to the index, and Tesla was not in it. Then you can see on Monday it's sold off and came down to this area here and got a nice bounce off from that. And then here's the battery day. It also sold off and came down. Got a little trend line here. You could say that it found some trend line support. It bounced off of this trend line support and came back up. Okay. So recently it is pretty much in a triangle pattern. So price been pretty much kind of consolidating inside of this triangle, and basically want to see would it break out of this triangle on the upside or come down to the lower the bottom of this triangle, and see would it be able to find test for support again and get a bounce back up. Then maybe make another attempt of breaking out. Let's go and take a look at it on the 60-minute here. All right, basically I'm just zooming in. I'm just zooming in on this area. I also have a volume profile here. This is a composite volume profile. What I want to highlight here is essentially I have marked off a lot of these low volume area. These low volume area with a little bit of a pinkish type of a highlight color. And then I have this high volume area in a little bit of a light blue shade highlight color. Now, what this mean on these low volume, just for those that might not be familiar with volume profile, just a little brief explanation. The volume profile is essentially plotting volume by price level, right? So what we mean by that is it plot the traded volume for that particular price level. Typically you see the volume on a horizontal axis down here, and that is volume by time. It basically plot the amount of volume traded for that time period. So if I have volume down here and each one of these candlestick is represents 60 minutes or 1 hour, then the volume that traded, that amount of volume that traded represent the amount of volume traded for that particular hour, that 1 hour time frame, right? But in this volume profile, it is talk about the volume traded at this price level, okay? And the lack of volume that traded at this price level, right? So that's why we have the price here and the volume, and it's essentially it's a histogram of the volume by price. Let me say this: the market is basically controlled by the institution. When I say institution, basically talk about hedge fund and banks, like investment bank and like Goldman Sachs, J.P. Morgan, Merrill Lynch, Bank of America, Merrill Lynch, Morgan Stanley, and the Fidelity, the big hedge funds. I'm not talking about these moms and pop hedge funds. When I say institution, I'm talking about these big hedge funds and the banks. So if you agree that the 80%, at least 80% of the market is controlled by these guys, then those are the people that in effect generate these type of trading activity. So when you see a highly dense area on this histogram in that cluster of price area, you can see that there are a lot of institution involvement in there, right? Because I have to be institution trading take place there in order to generate that type of volume. Now on these low volume area, these are the low volume area that there's hardly any trading activity occur there because, either there's no buyer or there's no seller. See, if you look at the market, it's a auction. When the price get down to this area here, in one of these low volume area, and the reason why there's hardly any volume traded there is because the seller doesn't want to sell at that price level because they consider it's too low of a price for them to sell. They did not consider that as a fair price. So when you have buyers that want to buy at those levels and there's no seller, then the buyers basically have to lift the bid. In other words, offer a higher price to entice the seller to sell the share to them. So the buyer have to lift their bid in order to, find willing seller to sell. And that's basically is the auction. And same thing here, when it get up to here. So when the price get too high, then there's no willing buyers. Buyers, they say, no, I'm not gonna buy at this high of a price because it's getting too high for me. So you got seller up here that want to sell the share and you don't have buyer. There's no buyer up there. Then basically they have to lower the price until they find buyers. And that's essentially what's happening here at these, low volume area. When the price come up to it, then typically you see it as a resistance because of what we call rejection. It's rejected because, there's lack of buyer willing to buy at that price because they consider that it's an unfair, too high of a price to buy. So the seller have to drop their asking price to find willing buyer that find that the price level to be acceptable to them. And that's what we call price acceptance. Like in this area where there's a lot of transaction going through, every transaction, every trade involves two parties, the seller and the buyer. So when there's a lot of activity going on in this, this price range here, it means that there are willing seller and willing buyer. And what we mean by willing seller is that the seller considers this price level is a fair price for them to sell. And same thing, the buyers consider at this price level is a fair price for them to buy. So in these high volume area, the price is what we consider fair value price. So that's why you get a lot of these transactions. And of course, eventually, it will exhaust all those sellers that want to sell at this fair price and all the buyers that want to buy at this fair price. Then it's depending, which side there are more. Is there more buyer that want to buy or more seller want to sell? And then once you get to that imbalance of buyer and seller, then the price have to move away from this fair value area. And that's where we see that the price here start coming down. And now it's approaching a low volume area in which that previously we found that here that the price, the seller consider is too low for them to sell. So they don't want to sell at these price level. So right now it's coming down to that level, and we want to see is that the same thing happened this time as it did last time over here. So we're going to keep an eye on these levels somewhere around this 439, 440 area to see do we get a bounce on that. Now, if there are more seller here that is willing to sell and they want to get out, and they want to drop the price down, lower the offer price to find buyers to take it off their hand, and that will force us down here, then maybe in this high volume area that we will get into another fair value zone that there are willing buyer and willing seller to consider, hey, that's a reasonable price here for me to buy some or for me to sell some. So we could see that there could be some price chopping around here, essentially come down, and then we start seeing a little bit of a chop. And then, then people say, oh yeah, I found support on the trend line here, and then we get a light bounce. Right? So it will depend, and then maybe come up here and then get rejected back down, and then eventually come back down here and test this area to see is the seller consider that it is too low of a price for them to sell. And there are buyers here waiting to buy. and they want to buy down here, are they willing to bid it back up to try to entice seller to sell the share to them? That's basically what we're looking at. And now let's get down to talk about the price level. Next week, we're going to be looking to see if we get a bounce back up here and get back up to the next zone, or come up here and then chop around here before it slowly move up to this area somewhere around 470, 475 area, right into this zone here. And if it doesn't, and if it just come down, then we basically are looking for this thing to chop down here to bounce around. And then we're going to wait until it come down to this area here, somewhere around, 405 area, to see do we get a bounce here to consider, going long. Because we don't want to buy at this chop area. We want to, basically take advantage. If we are shorting it here, you basically want to come down to this chop area and maybe, kind of trail your stop to scale out or something like that. But for us to initiate any type of buying or selling, we don't want to buy or sell, or basically buy in this area here or short the share here. So what we're going to do is we're going to watch, and essentially if the price come down, let's say the price come down here, and then it come back up, then we could take a long here to play it up, basically back up to this area, and with a stop just underneath there. So you get a nice all in all, right? Small risk side, and you get the nice multiple reward side, okay? And that's basically how I like to trade, is to trade off of these narrow low volume zone here. Basically, that's what I'll be looking for next week. Now, these trade that I'm talking about is not into earning, because I don't trade into earning. In other words, I don't carry a trade into earning report because it's too unpredictable. Even though we're anticipating Tesla to report good profit and that kind of stuff, something could be said in the conference call or in the forward-looking statement or lack of something. It's all depends how the street feels about Tesla at the time. If they have a bias toward the downside, it doesn't matter how good the news, they're always going to find some excuse to say Tesla is not worth this much, and then they're going to dump it, right? So that's why I don't trade into earning. I would rather wait after they have reported earning, then I look for trade opportunity, or trade up to earning, right? And then you get out right before earning. So next week, if we see opportunity here, and we could get a quick trade to come up, maybe maybe a couple R here, right? Come up here and somewhere around here. So if we take a risk here and play it up to this pivot, swing it up for that pivot, that's basically a little bit over 2R, right? Risk one, make 2 plus, okay? That's pretty good. Like to make more. With these kind of scheme, you should be making more. So that's basically what I'm looking for next week on Tesla before earning. Now after earning, then we want to see if it's going to pop up here, then I'd be looking for this thing maybe move up, okay, and then come back down. And what I'm going to do is going to play the short. Basically, I'm playing a probability game. I got nothing against Tesla, and I'm not a fanboy or a hater of Tesla. I'm just a trader looking for opportunity to make money. Then I'm going to short here and with a stop here, and basically play it back down to this area with a chop over here. So again, you're basically playing the zone. See, the thing is, you have to understand, 80% of the time, the stock is in a range. The market is trading in a range. Only 20% of the time, it is trading in a trend, right? And that's basically what I'm looking for right now, is for either, after earning, if it come up here, and look for it to pull back down and short it right here in this zone here, and play it back down toward this zone, okay? Now, if it dropped, let's say if it dropped, then I'd be looking for this thing to drop down here at this level and see could I play it long, and play long to come back up at this area, okay? Now, then you probably ask me, hey, what is this over here? that is what the market is pricing in for Tesla to move. Based on Friday's close, the market is pricing Tesla to move somewhere around between $48 and $49. So it's plus or minus $48 or $49. And this is what it represents. That means the price could come up here or it could come down to this level. And here's a sucker trade. A lot of people are basically buying these strangles. Well, what that is the option play that you buy the put and the call. Right? And that's basically how these expected move is being determined. It's using the volatility, the implied volatility, to calculate the expected move. And you can see the premium or the price for the option for the at the money put and at the money call. So you buy the put and call at the same strike, and if you add that, the cost of that strangle is basically the expected move. Now my calculation is a little bit different than that, so I got a little variation of that, but it's pretty much that idea. So the expected move is somewhere between $48 and $49 plus or minus. And I am saying, based on this, I am basically looking for it to fall short of this expected move. Now, if it comes down more than the expected move, then essentially I have a 2x of the expected move here. And likewise, I have the 2x of expected move on the upside. You have to understand, a lot of the market maker, they sell these options to the retail guys or whoever want to buy these options. And in order for them to make money, they want these things to expire worthless. So if a lot of people is buying these strangle or betting on this expected move here, buy an option up here, the market maker want to see the stock price close inside of this expected move, then they be able to keep majority of the premium that they have collected. So that's the game. And that's the reason why I'm looking at these zones, and these zones happen to be the low volume zone, and that's where they get rejected. And I wouldn't be surprised that the option or the Tesla price will fall inside of this area next Friday. That will basically, a lot of the institution and market maker is doing their little business here and closing out the position to collect all the premium. And look at here, it's very close to where the money is, right? At the money. Yes, there will be ups and downs, the volatility for traders to make money, short-term traders. So that's basically what I'm looking at for Tesla. I hope you enjoyed this video, and be sure to click on that thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.